If you have a student loan or a kid heading toward college, the rule book you planned around just got rewritten. As of July 1st, the biggest federal student loan overhaul in years is now in effect, and most borrowers have no idea what it means for their wallet. I'm Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. Let's talk about what actually changed, because these new rules touch your monthly payment, your borrowing limits, your credit, and yes, even your future mortgage. First, the SAVE, S-A-V-E repayment plan is being phased out. If you were on it, watch your mail and your email, because your servicer is moving you. The new primary income-driven option is called the Repayment Assistance Plan, or RAP. Under RAP, your payment is based on your income and family size, typically between 1% and 10% of income. Families get a $50 monthly payment reduction for each dependent. Here's the part I like. If you make your required payment on time, any unpaid monthly interest may be waived. That means your balance stops growing while you pay. And if your payment does not knock at least $50 off your principal, the government may match up to $50 a month toward it. If you've been paying for years and watching your balance sit still, that is real relief. Second, the old 10-year standard plan has been replaced with tiered standard plan. Your repayment term now depends on your balance. It could be 10, 15, 20, or 25 years. So what does this mean for you? A longer term means a lower monthly payment, but more total interest over the life of the loan. Sound familiar? It's the same trade-off I walk families through on mortgages every week. The payment is not the price. The total cost is the price. And strategy beats rate always. Third, graduate students just lost the blank check. The Grad Plus program is being eliminated for new borrowers. In its place are hard caps, $20,500 a year and $100,000 lifetime for standard graduate programs, $50,000 a year and a $200,000 lifetime cap for professional programs like medical or law school. There's also a combined federal lifetime limit that counts what you already borrowed. If someone in your house is considering an expensive graduate program, compare scholarships, employer tuition help, institutional aid, and private options before signing anything. Fourth, Parent Plus loans now have real limits, $20,000 per child per year with a $65,000 lifetime cap per child. And here is the part parents need to hear. New Parent Plus loans issued after July 1st, 2026 may have fewer payment options than the old ones. If your college plan was, we'll figure it out with federal loans, that plan needs an update. Picture this, a family with 2 kids and a gap of $40,000 a year between savings and tuition. Under the old rules, federal loans could stretch it to cover it. Under the new caps, they cannot. That family needs a written plan years earlier, not a surprise in the financial aid office. Fifth, one piece of good news that is easy to miss. The auto-pay discount on federal student loans jumped from 0.25% to a full 1% rate reduction on the interest rate. But there is a deadline. You need to be enrolled in auto-pay or enroll by September 30, 2026. The enhanced discount currently runs through June 30th, 2028. If your budget can handle automatic payments without risking overdrafts, that is one of the easiest savings you'll find anywhere. Now, why am I, a mortgage guy, spending a whole segment on student loans? Because your student loan is not just a college bill. It's a line on your credit report and a line in your debt-to-income ratio. Payment history is the single biggest factor in your credit score. And these servicer transitions are exactly when payments get missed by accident. When you apply for a home loan, your student loan payment helps decide how much house you can qualify for. A repayment plan change of a few $100s a month can move your buying power by tens of thousands of dollars. So check your credit report while these changes roll out. You can pull your report and score at rsrlinks.com/FICO. That's rsrlinks.com/FICO and see exactly what lenders see. And if these changes have you rethinking your whole household budget, I offer a free tool for that. Key Steps helps you monitor your credit, build a real budget, and track your assets in one place. Go to rsrlinks.com/keysteps and set it up right now. That's rsrlinks.com/keysteps. Know the new rules, run the numbers before your servicer runs them for you. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment, brought to you by rsrwealthbuilder.com, rsrwealthbuilder.com.